Greetings, dear viewers. Delighted to have your company as we embark on an interesting journey today. We're diving into the captivating world of credit cards, a common item in our wallets that has an intriguing past. Our story begins in the late 19th century with the concept of credit cards taking form. However, it wasn't until the mid-20th century that the idea truly took flight. Picture this. The year is 1958. Bank of America launches Bank AmeriCard, the first successful modern credit card. This innovative card changes the way people manage their finances, offering a new method to make purchases and withdraw cash on credit. This was a game changer, introducing a balance of debt that could be repaid later, subject to interest. As the years rolled by, credit cards began to evolve. They became more than just a means of borrowing money. They transformed into a financial tool with specific dimensions and features like a magnetic stripe and smart card technology for security. Credit cards became an integral part of our lives, a symbol of financial independence and convenience. Fast forward to today, and credit cards are more prevalent than ever. As of mid-2018, there were over 7 billion credit cards worldwide, with over 1 billion in the US alone by 2020. This little piece of plastic has truly left its mark, reshaping our spending habits and financial landscape. Isn't it fascinating how a simple piece of plastic revolutionized our spending habits? But wait, there's so much more to explore. Now, you might be wondering, why are credit cards such a big deal? Well, credit cards are more than just convenient pieces of plastic. They play a significant role in shaping our economy and consumer behavior, and their importance cannot be overstated. Credit cards provide us with the ability to purchase goods and services now and pay for them later. This flexibility can be a lifesaver in emergencies, or when cash flow is tight. They also enable us to make large purchases that might otherwise be out of reach. But it's not just about individual convenience. On a larger scale, credit cards keep the wheels of commerce turning. They facilitate online shopping, making it easier for consumers to purchase from businesses across the globe. This boosts economic activity, creating jobs and contributing to economic growth. Credit cards also play a significant role in shaping consumer behavior. They offer rewards, cashback, and other incentives that encourage spending. These perks can influence where and how we shop, steering us towards certain brands or types of purchases. Moreover, credit cards are a global phenomenon. As of the year 2020, there were over 1 billion credit cards in the United States alone. That's more than 3 cards for every man, woman, and child in the country. And worldwide, the number of credit cards is in the billions. But while credit cards can be beneficial, they can also create problems if not used responsibly. They make it easy to spend beyond our means, leading to debt and financial hardship. And the high interest rates charged on unpaid balances can make this debt grow rapidly. So yes, credit cards are everywhere. They're a ubiquitous part of modern life. But as we navigate this world of instant gratification and easy credit, we must always keep in mind that with great power comes great responsibility. They're everywhere, aren't they? But remember, with great power comes great responsibility. Now, let's delve into the darker side of these shiny cards. Credit cards can indeed be enticing with their promises of rewards, cashback, and travel points. The allure is undeniable. They offer us the ability to purchase now and pay later. They're convenient, and they can even feel like free money. However, the truth is that these cards are not designed purely for our benefit. They are a business, and like any business, their ultimate goal is profitability. And this is where the trap lies. While you're enticed by the rewards and the convenience, you might overlook the fact that these cards often come with high interest rates. This means that if you don't pay off your balance in full each month, you'll be charged interest on the amount you owe. Over time, these interest charges can add up, leading to a mountain of debt that can be difficult to climb out of. Moreover, credit cards often come with fees, such as annual fees, late payment fees, and foreign transaction fees. These can quickly add up if you're not careful. Not to mention, the potential for overspending is significantly higher with credit cards, simply because they make it so easy to spend money you don't actually have. The credit card companies also have a few tricks up their sleeves. For instance, they might offer a low introductory interest rate to lure you in, only to hike it up after the initial period is over. Or they might offer you a credit limit increase, tempting you to spend more than you can afford to pay back. These traps can lead to a cycle of debt that can be hard to break. You might find yourself using one credit card to pay off another, or constantly making minimum payments without ever making a dent in your balance. Beware, my friends, not everything that glitters is gold. While credit cards can be useful tools when used responsibly, it's important to understand the potential pitfalls and traps. Always read the fine print, understand the terms and conditions, and most importantly, spend within your means. Here's a critical aspect of credit cards: your credit score. Now, what's a credit score, you ask? Imagine it as a report card for your financial behavior. It's a 3-digit number that lenders use to assess how likely you are to repay your debts. The higher your score, the more creditworthy you appear to lenders. Credit cards can either build or damage this score depending on how you use them. Paying your bills on time and keeping your credit utilization low? That's like acing your exams. It helps build a great credit score, but if you're making late payments or maxing out your card regularly, your score could take a hit. And a poor credit score could mean higher interest rates or even loan rejections in the future. But what if you're just starting out and don't have a credit score? Or maybe you've made some financial missteps in the past and need to repair your credit. That's where secured credit cards come in. These cards require a deposit that sets your credit limit, acting as a safety net for the lender. They're accessible to individuals with lower or no credit scores and can be a valuable tool to build or repair your credit. Just remember, the key is responsible usage. On the other hand, unsecured credit cards do not require a deposit. They're typically issued to individuals with good credit scores and come with higher credit limits and sometimes even rewards. But they also come with risks. Since these cards often have higher spending limits, it can be easy to overspend and fall into debt, damaging your credit score. So, whether you're using a secured or an unsecured card, it's crucial to monitor your credit scores regularly. This way you can understand the financial impact of your actions and guide your credit behavior accordingly. Remember, a credit card can be your ticket to financial freedom or your path to monetary doom. The choice, my friends, is in your hands. Make wise decisions and let your credit card be a tool for financial empowerment, not entrapment. So is there a way to use credit cards wisely? Absolutely. The first golden rule is to pay your bills on time. This not only keeps you from racking up late fees and interest charges, but it also helps maintain your credit score. Remember, credit scores play a vital role when it comes to borrowing money for big-ticket items like a house or a car. The second rule is to avoid exceeding your credit limit. Try not to view your credit limit as a spending target. Instead, aim to keep your balance low relative to your limit. This is known as your credit utilization rate, and it's a significant factor in your credit score calculation. A third tip is to regularly monitor your credit score. Keeping tabs on your credit score can help you understand how your financial behavior affects your credit. Additionally, it allows you to spot any errors or suspicious activity that might indicate identity theft. There are various free services available that provide monthly or annual credit reports. Lastly, if you're new to credit cards or trying to rebuild your credit, consider starting with a secured credit card. These cards require a deposit that sets your credit limit. They can be a valuable tool for building or repairing credit, provided you make on-time payments. Remember, credit cards can be a useful financial tool when used responsibly. They can help build your credit history, provide convenience, and even offer rewards. However, it's crucial to avoid falling into the trap of overspending and accruing debt. Control your cards. Don't let them control you. Well, we've certainly covered a lot of ground today, from the captivating history of credit cards to their profound impact on our economies. We've dived deep into the allure and the potential traps that can befall the unaware. Remember, knowledge is power. Understanding how credit cards can both build and damage your credit score is vital. Make informed decisions and use your credit cards wisely. After all, they're a tool, not a trap, when used responsibly. Thank you for joining us on this journey. If you found this video helpful, please subscribe to our channel and share this video. Until next time, stay savvy and stay safe.